The slowdown in inflation in the United States turned out to be larger than all the wildest forecasts. The lower than expected annual CPI should have provoked the depreciation of the US dollar. However, the situation in the currency market remained unchanged. Let's figure out why. The annual consumer price index slipped from a 2.9 to 2.5% in August. Immediately after the publication, mass media shifted focus towards core inflation. Curiously, market participants give a priority to the core CPI on March, which grew by 0.3%. Although this metric is never mentioned by the US Central Bank as being extremely insignificant, the media began to argue that it's precisely because of core inflation that the Fed Reserve would be extremely cautious in cutting interest rates. Thus, the hype in the media somewhat balanced the actual data. That's why the market retained its previous sentiment. The US dollar was even able to regain its footing, rebounding above the level of 101.70. Investors are now waiting for the US factory inflation data, which will be published today during the early New York session. The market wants to make sure that high inflation still poses the main threat to the successful development of the economy. Today, market participants are looking forward to the ECB policy meeting. Interestingly, the market has already priced in a rate cut from the current 4.25 to 4%. In other words, the actual rate cut will hardly influence market sentiment. So, investors will be alert to the press conference by Christine Lagarde, as she is expected to shed light on the further policy moves. The market is only concerned about the pace of a monetary policy easing, at least until the end of the year. If the ECB president announces at least one more decrease in the interest rates, this will greatly help the US currency. Hence, the dollar may continue to strengthen its position. In high volatility conditions, the euro-dollar pair hit the level of 1.1000, but there were no radical changes. Traders cut down on the sell positions on the euro-dollar pair. Then, the instrument got stuck in a range. To continue the decline, the instrument has to settle below 1.1000. So, the US dollar will be able to continue its steady rally. Until then, traders will consider scenarios of a stagnation or rebound from this level. Traders will increase long positions if the price settles above 1.1050. The oil market is trying to stabilize and level out the excessive imbalances. Oil prices are gradually going up and have already climbed above $70 per barrel. However, from a technical point of view, the recent decline below $70 signals a possible continuation of the downtrend. If after pullback upward, the Brent price falls below 70 again, the odds are that the Brent crude will extend its weakness. It seems that investors have gradually begun to realize that such price dynamics are packed and its allies may eventually decide on oil output cuts, even despite the increase in crude oil inventories in the US. Crude reserves increased by 800,000 barrels last week. The thing is that the overall downtrend in reserves was so large scale that there is no talk of any oversupply of oil markets. The Russian ruble is still steadily moving towards 92 per dollar. The dollar-ruble pair is likely to consolidate in a narrow range between 90 and 92. Perhaps something will change tomorrow. The Bank of Russia is holding regular policy meeting tomorrow, and thus the sentiment on the ruble will depend on the results of the board meeting. Until then, the dollar-ruble pair is going to trade flat. That's all we have for now. We monitor the developments in the financial markets. Subscribe to our channel and stay up to date with the news with us. See you later.